Warren Buffett is a genius investor. Everybody knows that. He has been in the investing game for decades now, since the 1940s, and has many holdings. But there is one thing which appears to be quite unique about almost all the stocks he owns. They are dividend-paying stocks. He loves to buy dividend stocks but never pays any dividend himself. And today, we're going to take a look at all of this in deeper detail. Before we get into these reasons, if you like our cutting-edge investment and business content curated by professionals with decades of investing and entrepreneurial experience, subscribe to our channel now and join in on our alerts so you never miss our new content. For owners and managers of businesses, their aim is always to be able to allocate capital in a way that will make sure shareholder value is maximized. Dividend stock generate cash that investors can use at any time. And at Berkshire Hathaway, Warren Buffett always wants to have cash on hand for more new investments or reinvesting in existing holdings. So he'd rather buy stocks that pay him dividends than pay dividends out from Berkshire Hathaway. And so all 7 of his biggest holdings are dividend-paying stocks. In fact, almost 90% of the market value of Berkshire Hathaway's portfolio is invested exclusively in dividend-paying stocks. The simplest reason for Warren Buffett's love of dividend stocks is that these stocks literally pay him to own them. The money generated from the dividend stocks leave Warren Buffett and Berkshire Hathaway with a stream of cash for business acquisitions, and he loves making acquisitions, especially businesses with strong competitive advantage and economic moats. Acquisitions is not the only use for the money from dividend stocks. It could also be used to finance equipment upgrades in Berkshire's other buildings. For a company like Berkshire Hathaway that has subsidiary companies, this option comes in very handy. Also, the money can be used to finance share buyback programs. For example, whenever Berkshire's stock is trading at a cheap price, its threshold being 120%, the company can pump dividend money to buy back shares from its investors, so the company can retain more control of itself. And even when there's currently nothing to do with the dividend money, Warren Buffett doesn't mind just letting the money pile up while waiting for the next big investment opportunity to show up. And sometimes, the cash may even accrue value if the economy is really strong. Paying dividends, on the other hand, takes money out of the business and puts it into the hands of shareholders, which encourages investors to invest, but leaves you with less cash. Besides, it's always better that a company reinvests its profits into the business or even into other businesses where there are better investment opportunities than to liquidate its profit and share to its shareholders as dividends. As far as Warren Buffett is concerned, dividend stocks are really the best stocks, and most investors jump at them. Warren Buffett has been raking up dividend stocks for so long that he even has a formula for successful dividend investing. It starts like this. Any business that can pay dividends, which consistently rise year over year, will provide you as an investor with a stable, steady, and increasing stream of cash. You in turn, as the investor, can withdraw these dividends and pump them into reinvesting in other businesses by buying up more stocks. It's best to consider a company with strong economic moats and competitive leverage. Or you can simply reinvest the dividends you receive back into the same company that paid you that dividend to maximize your exposure to that company even further. Warren Buffett absolutely loves dividend-paying stocks, and not just any kind, but especially the ones where there is a consistent and impressive increase in the dividends year after year. This is because it's a constant cash supply to be deployed for other uses. This is a very good investment strategy that makes sure your original investment is safe while constantly yielding returns. The formula is simple and easy to follow, and if you also adopt this formula, you can likely expect to build safety and pad your portfolio with profits. Dividend-paying stocks are not very common these days, but if you do find some that you like, they are worth strong consideration. Thanks for watching. If you like our cutting-edge investment and business content curated by professionals with decades of investing and entrepreneurial experience, remember to subscribe to our channel and join in on our alerts so you never miss our new content.